Imagine if I told you that you don't need high accuracy to be a profitable trader. Sounds crazy, right? What if I said it's actually your risk to reward ratio that can make or break your profits? You could lose more trades than you win and still end up on top. Intrigued? Stick around, because today we're breaking down why the risk to reward ratio is one of the most crucial and underrated factors in trading success. So let's break it down. What exactly is the risk to reward ratio? In simple terms, it's how much you're willing to risk on a trade versus how much you stand to gain. For example, if you're willing to risk 100 rupees on a trade with the potential to make 300 rupees, that's a 1 to 3 risk to reward ratio. Now let's talk about accuracy. In trading, accuracy is just how often you're winning trades. A high accuracy rate means more trades going in your favor. Makes sense, right? But here's where the misunderstanding comes in. Many new traders believe that to be profitable, they need to win as many trades as possible. But that's actually a huge misconception. Chasing accuracy alone can lead you to overtrade, increase stress, and sometimes even result in bigger losses due to impulsive decisions. Let me give you an example to illustrate this better. Imagine we have two traders. Trader A has a 60% win rate, but uses a 1 to 1 risk to reward ratio. Trader B, on the other hand, has only a 40% win rate but follows a 1 to 3 risk to reward ratio. So, who's more profitable? Surprisingly, it's Trader B. Why? Because even with fewer wins, their profit from winning trades significantly outweighs their losses. This brings us to the core idea. Profitability doesn't require you to win more, it requires you to earn more when you do win. Alright, let's break it down with some quick math. Suppose you take 10 trades and are willing to risk 100 rupees on each trade. If you have a risk to reward ratio of 1 to 3 and you only win 4 out of those 10 trades, guess what? You'd still be in profit. The 4 winning trades would bring you 1200 rupees, while your 6 losing trades would only cost you 600 rupees. Compare that to a 1 to 1 ratio 1 ratio, where you'd need to win at least 6 out of 10 trades just to break even. Now, a high risk to reward ratio doesn't just help you mathematically, it also helps you emotionally. Why? Because if you know a few losses won't wipe out your account, you're more relaxed, less desperate to win, and ultimately, you make better decisions. Let's walk through how you can actually apply this in a trade setup. Say you're trading stock XYZ. After analyzing the chart, you spot an entry point at 500 with a target of 530 and a stop loss at 495. That setup gives you a 1:6 risk to reward ratio. With this setup, even if you only win 20% of such trades, you're still in profit over time. This is what I mean by the power of the risk to reward ratio. It gives you room to be wrong more often, but still end up in the green. So if you've been focused only on your win rate, try looking at your risk to reward ratios. It's a game changer. Now let's talk about ways you can boost your risk to reward ratio in practical terms. Here are a few simple strategies to help you do just that. First, set your target and stop loss levels thoughtfully. Don't rush to take profit or cut losses too early. Make sure each trade has a ratio that fits your target. Second, look for trades where your entry is close to a support level or a resistance level. This way, your risk remains low, but your potential for reward stays high. To wrap it up, remember that profitability in trading isn't just about being right all the time, it's about making sure your wins outshine your losses by focusing on a strong risk to reward ratio. Shift your focus from winning more trades to winning the right trades. So, what do you think? How do you currently manage your trades? Have you found any strategies that help improve your risk to reward ratio? Share your experience with us in the comments below. And if this breakdown helped clear things up, go ahead and hit that like button, subscribe for more trading insights, and hit the notification bell so you don't miss out on any of our future videos.